Good morning and thanks so much for tuning in. This is Straight Talk on BQ Prime. My name is Alex Matthew. Imagine an F1 race where the race is just about to finish with the car that you're rooting for reaching the finish line. And just before that, that car needs to take a pit stop. It's going to reach eventually. You know that it's going to cross the finish line. It's just delayed a bit. I guess that's the story of the Nifty 50 in 20,000 because Infosys might just be that pit stop.
Absolutely, and that's what is causing the delay as well. Now, what happens in today's session is going to be interesting because the expectation yesterday was that though we did not hit the 20,000 mark in the last hour of trade, at least we would open with the 20,000, and that does not seem to be the scenario with the ADR down almost 9% in trade.
But it was edge of the seat stuff yesterday. It was like watching an F1 race, which is why I drew that comparison. In the last hour of trade, you were seeing tick by tick, it was heading higher to that 20,000 mark. And we were all gearing up, or rather everyone in office was gearing up to tell you about the significance of that move. Of course, it's just a number, 20,000, but it is a landmark number. And we have gained about 10% or so in the year so far. We're still lagging certain markets. The S&P 500 is up about 18.5%. The Nikkei 225 is up over 25%. So we're still lagging.
Absolutely. We're still lagging, but we are one of the most expensive markets as well. So that's something we need to note. But clearly, Alex, 6 consecutive sessions of rally that we've seen in the markets. What is going to be interesting is we're just 20.85 points away from the 20,000 mark. This is basis the high that we hit in yesterday's session, that was 19,992. Overall, yes, Bank Nifty did come in as a support point. There was outperformance with regards to Bank Nifty as compared to domestic benchmark indices. Let's quickly look at the resistance now. The psychological mark of 20,000 is acting as a key resistance with regards to where Nifty 50 goes. And there has been massive short covering that has been observed at 19,800, 19,850 as well as 19,900 strike. With regards to Bank Nifty, the resistance is now shifted to 46,500, which was previously at 46,000, and that will continue to act that as a support from here on. If you see the put OI, the highest is seen at around 19,800, whereas on the call side, the highest OI is at 20,000 strike, whereas the next highest is 20,100. So now that's becoming the key zone that we are watching out for. Now, we've seen long build up in terms of the F&O side of it in the last 5 of the 6 trading sessions. And that is clearly indicating that there is strong buying interest in the market as well. In fact, if you see from the 17th of July to now, the Nifty moved from almost 19,711 to 19,979. But during this movement, if you talk about the put call ratio, that fell from almost 1.44 to around 1.4. So this is indicating though that the put writers are really not comfortable adding positions at higher levels. So that's the overall setup looking like from a technical and if you see from a derivative perspective. But the key question now is whether today's session will help us hit the 20,000 or will it be pretty much close towards expiry, which will be by Thursday? Because there should be some bit of profit booking that will start kicking in.
No, certainly. And in fact, we kind of tried to get a sense of what the brokerages also felt about that 20,000 number for the Nifty 50. And our colleagues were on the phones over the course of the last couple of days, particularly yesterday, to try and answer or get a few answers to some very key questions. And this is the results of that poll. The first question was, will the Nifty 50 sustain that 20,000 mark? As many as 14 brokerages were polled, and quite a few of them believe that yes, the Nifty 50 will sustain 20,000. 5 of them said yes, but 7 of them said there's a caveat and there is likely to be a bit of a correction in the near term. And just a couple of them said that it depends on the first quarter earnings. Which sectors will help the Nifty 50 sustain above 20,000 was the second question. And a vast majority of them, in fact, all of them said BFSI is the sector that will keep it above the 20,000 mark. IT is interestingly another answer to that question. And in the context of what we saw with Infosys, perhaps we might have to go back to them again to ask the question. And then it was divided between cap goods, auto, metal, FMCG. The third question was, which stocks will help the Nifty 50 sustain 20,000? And the key answer here is Reliance Industries. which, as you know, has been the key contributor to the Nifty 50 in the run from 19,000 to 20,000 as well, gaining over 10% in that period. TCS, Infosys, and HDFC Bank also seen contributing. Which sectors will create a drag on the Nifty's rally was also a question that we asked. And here too, the results were a bit of a mixed bag. Banking, considering the kind of exposure it has to the Nifty 50, again, 4 brokerages felt that this could prove to be a drag. And then it was quite an even split in the rest of the sectors, with chemicals, cement, IT, all having a couple of responses each. The final question that we asked was, which sectors will lead the charge beyond the 20,000 mark in the medium term? And here there was a very interesting response, Hiral, and that was that cap goods and infra got the highest number, with as many as 6 brokerages saying that that is a sector to watch in the medium term. Of course, BFSI got as many as 6 responses as well, and then the rest of the sectors got.
Right. I mean, it's an interesting survey that we've done. And with this, it clearly gives you some bit of an indication from here on as to where we could be headed and what it looks like. But let's see what happens, because the initial poll that we had was to start off with, when will Nifty hit 20,000? Yeah. But by the time the kind of rally that we saw yesterday, we had to actually eliminate that question completely from the poll. And now you have an Infosys which has come to derail it completely so far. In fact, Tushar is standing by with more. He's been doing the number crunching yesterday, pretty hard to understand why this kind of a guidance cut that is coming. Good morning, Tushar.
Good morning. Good morning, Hiral. Alex, if I want to, allow me to extend the analogy that you started the conversation with. You equated Nifty 50 to 20,000 F1 race. Infosys is screeching to a halt. Yeah. That's the best way to describe what's happening at Infosys. It's a flat tire. It's a flat tire at the end of the race, or at the beginning of the race, because we're beginning of fiscal right now. So what has happened right now is Infosys, which guided for 4 to 7% revenue growth at the end of the Q4, has now cut it further to 1 to 3.5% now. So what that essentially means, and what the commentary is coming from the company, is that the key reasons for the cut in revenue guidance are the mega deals have been pushed to the second half of the year. There's a significant cut in discretionary spending. There's a significant delay in decision making. So the signings that are happening, there's a big difference between the signings that are happening right now and the implementation is getting even further delayed. The volume of the mega deals from the most important sectors of BFSI, retail, telecom is eroding. Decision making has slowed down. There is no timely deal ramp up. Infosys is expecting a pickup, maybe these deal conversions to show in the revenue only in the second half of the year. Historically and seasonally, we also know that the second half of the year is not a happy period for Indian IT, so to speak. So in that sense, I'll actually bet that the entire FY24 is going to be a washout for the entire sector, because Infosys is guiding for 1 to 3.5% growth. I don't know how the rest of the others will perform.
So that question is what we're going to pose to the expert that's joining us. Tushar, thanks so much for that. Mahantesh Sabarad is joining in. Mahantesh, thank you so much for taking the time and also for your patience. That last point that Tushar was making, Infosys looked at as a bellwether for the sector. But there is a discordance as things stand right now in the outlook that they are giving and what everybody else seems to be saying. Is this a washout year for the IT sector?
Let me single out Infosys vis-a-vis the other bellwether stocks, or the particularly large 3 companies. If you notice the results and do a deep dive into the Q1 results, and here I will look at the YOY comparison, not necessarily the quarter-on-quarter comparison, because the YOY number will tell us what would be the remaining steam left in terms of the growth ahead for the year. Now, if you look at within the top 3 companies, Infi, HCL, TCS, you will notice that the BFSI sector, which is typically the strongest part of their services, has been growing differently for these 3 companies. It's a 14.4% growth for HCL Tech on a YOY basis, constant currency. It's a 3% growth for TCS and a minus 4.2% for Infosys. That's where the difference lies. I think we should therefore single out Infosys away from the IT sector. I don't think the sector is facing much of a problem. It's just that the problem seems to be limited to Infosys.
Right. Good morning, Mahantesh. So my next question coming to you is, if you're saying single out an Infosys, do we still make that divide now between the mid-cap IT and the large-cap IT companies, wherein you do have the mid-cap IT companies which have performed really well in this quarter, and that's where the juice lies now?
Yes, you are right, because most of these mid-cap IT companies have an exposure which is non-BFSI. They have typically an exposure on the engineering services side, on the manufacturing side, a bit on retail digitization and so on and so forth. Now, let's look at Infosys' manufacturing vertical. They have posted a 20.7% YY growth in that vertical for this quarter. That tells you the story. And if you look at the other bellwether companies as well, they have done something similar. For mid cap, this is like the bread and butter kind of a segment or sector. And therefore, we find that most of the mid cap IT companies who have engineering services as their core doing really well going in, and their prospects therefore seem pretty solid for the year ahead.
Mr. Sabarad, Tushar here. Just one question to you, sir. We were chatting with Infosys early in the morning. They said that for them, their BFSI revenue declined by around 9% quarter on quarter. But they are saying now they're seeing some green shoots of recovery for them. Do you think that this is the bottom for certain IT companies? Let's keep aside Infosys. So this is the worst that can happen to an IT now? Is this the bottom that we have reached?
Probably not, because the green shoots commentary comes really from the fact that if you correlate the IT sector's performance with the results that some of the US banks have released in this first quarter, then you will notice that the banks in US have really done well, recovering from a low base, and therefore there is this hope that most of these IT companies have, that some discretionary spends from the BFSI sector, particularly these US banks, will come back into the game and help them recover their past degrowth. But having said that, the dichotomy still exists. That means what we saw in HCL Tech and TCS actually posting a growth versus an Infosys posting a degrowth in the BFSI segment is gonna remain, and therefore that this bit of differentiation will continue to happen probably for the year ahead. The green shoots would be there. I don't disagree, simply because of the quarter one results of some of the US banks, but it is not necessarily green shoots for all the companies within the Indian IT sector.
Certainly. Thank you so much, Mahantesh, for taking the time and for putting that into perspective for us. We are focusing on the IT pack, and we're continuing to do that. In fact, a few of the smaller companies are going to be in focus on account of results, and I'm talking about the likes of Infosys, Persistent, as well as Coforge. Tushar is still with us. Tushar, what should you pay attention to when it comes to these? You mentioned that there seems to be a dichotomy with regard to the mid-cap IT.
Even Mahantesh mentioned the same thing, that there is a certain dichotomy that is there. If an IT company is exposed to BFSI, expect a bad result. If they're not exposed to BFSI, expect a decent result. That's the conversation that we are having right now. In that way, yes, you will see the same thing that has happened with Persistent Systems as well and Coforge as well, which are generally towards the engineering side of things and not necessarily towards the BFSI side. So they have performed relatively well to their peers. So much so that Coforge has actually maintained its revenue guidance for the full year. Infosys, on the other hand, has said the BFSI revenue for Infosys has declined 9%, as we mentioned some time back. But what they're saying now is they are seeing the green shoots of recovery. That, as what Mahantesh also pointed out, may not extend to everybody. But the crux of the matter here is that the mid-tier is doing better than the larger peers at this moment. Alex.
Yeah. All right. So that clearly is the focus. And I'm just thinking about the stock performance as well, right? Because you've had, and we were talking about Infi and the fact that apart from the ADR overnight and what we will likely see in trade today, it's had a pretty good run in the recent past, right?
Yeah, but that is coming to a halt today.
So what about the mid-cap IT companies? What are people saying about valuations?
The valuations, at least at this point of time, I would suggest that it's again a wait and watch game. We should not, if you remove Infosys, we can equate that, but I think would be fairly valued at this point of time. Nothing more to say on that.
And it's going to be interesting to see, because if you talk about the poll that we conducted as well, we're still betting big on an Infosys now. What happens from there on is going to be interesting to exactly IT as a sector and Infosys. So whether it's bottomed out with this and now the green shoots will start emerging is anyone's guess. But that's what we need to wait and watch. So that's with regards to where IT as a sector goes. Lots of movement that could be expected in today's session. Thanks, Tushar, for getting us the details. But moving on from IT, another stock from the consumption pack that has reported numbers is a HUL. In fact, if you talk about HUL as well, it's an interesting one because the way the volume growth has panned out, it's almost halved in this quarter. Now, was that in line with expectations or has that come in as a surprise? Sesa joins in with more details on it. Sesa, good morning.
Yeah, hi, morning.
Yes. So, Sesa, overall, how has HUL actually panned out in terms of numbers? Specifically, if you talk about the volume growth, a 3% number, what was the estimate?
Right. So, if we have to look at HUL's volume growth at 3%, it was less than what the street had estimated, right? And this was primarily driven by the food and refreshment segment. So the analysts, they were estimating about 5 to 6%. But however, we have seen a 3% growth, which is also the slowest pace of growth for the company in the last 5 quarters. Now, if you look at the particular categories, for example, tea, it saw a modest volume growth as the category continued to witness consumers downgrading to loose tea over premium teas due to higher inflation. Then unseasonal rains have also impacted the ice cream consumption. So similarly, the volumes in food, health food drinks and coffee were also impacted due to price hikes. So overall, what we understand that higher inflation continues to adversely impact the consumer spending. And on the outlook, even, the management has inflation is still high and the lower product prices, it takes time to flow through.
Okay, interesting points that you're raising there. Sesa, thanks so much for joining in and for giving us that perspective on HUL, another stock that you have to watch out for. Now, earnings is, of course, has been the focus all through the week. And in fact, there are quite a few stocks to talk about, companies that have posted their results. We'll start with Himanshu, who's joining in with a list of stocks that have posted results. What do you have for us?
Right. So starting off with the public sector lender, Union Bank, which had a good showing with the net profit up over 107% year on year, standing at 3,236 crores, also beating the Bloomberg estimates of 2,343 crores by a wide margin of 1,000 odd crores. While net interest income was up about 16.5% on a year-on-year basis, the gross and net NPAs were down by 7.34 and 1.58 respectively on a quarter-on-quarter basis. Then comes the fourth largest cement producer, Dalmia Bharat, which posted their numbers yesterday, wherein the net profit fell short of 100 crores against the Bloomberg estimates of and stood at roughly 144 crores, which is down about 30% year on year. Commentary from the management reflected optimism for the year ahead and cited the strong demand environment and the kicking in of the real estate cycle. They also noted a 12% growth in volumes and softening of fuel prices, which have stabilized expectations for the cement prices in the year ahead. And profitability prospects are also set to improve in the coming year, but this result was still under expectations. Lastly comes IndiaMart. The mid-cap posted 77% jump in net profits as margins remain range-bound around 27%. Manpower and other operating costs cooled off by 2 to 3 odd percent, given the inflationary pressure softening. The stock has given returns of roughly 35% year to date, while the Nifty 50 has only given returns of about 10% in the same period. So that's a summation of the three companies and their earning reports.
I wouldn't say only 10% because it's quite significant for the benchmark index. But thanks so much for that.
I mean, and a lot of companies which will see good, moves on this kind of numbers as well. So I think we will be watching out for
it. It's also, and we'll be talking more. But thanks so much, Himanshu, for that. IndiaMart Intermesh. We're going to be talking about a buyback as well. Of course, the number is going to be key to watch.
But apart from this, I think, Alex, there are a lot of other companies also. I mean, it's going to be a heavy day. In fact, Mika also has another list of companies which have reported numbers. Mika, what do you have on your cards?
Okay, so starting off with United Spirits, the consolidated revenues were down 18.55% year on year at 5,830.1 crore. However, the net sales, which is from the alcoholic beverage side, was it was up 28.6% at 2,668 crores, which was led by strong growth in the standalone business and also the revenue driven by the Indian Premier League new five-year media rights cycle. EBITDA was up 102.67% at 713.5 crores, and the company's net profit jumped 82.57% this quarter at 476.7 crores. Next, we have ICICI Securities, whose revenues were up 18% year on year at 934.4 crores, which was led by growth in the broking income and cash segment, which are gaining momentum, and growth in the investment banking segment. PAT was down 1% year on year this quarter at 271 crores. The equity revenue segment, which contributes to 23% of the total revenue of the company, grew 7% year on year, and the issuer services and advisory income grew 185% quarter on quarter. The total client base this quarter grew 16% year on year at 9.3 million. Next, we have 361 WAM, which was previously called IIFL Wealth Management, which also posted their results for this quarter. Revenue increased 18.64% at 558.96 crores. The net profit was up 17.35%. The wealth management profit before tax was up 97.19% at 144.35 crores. The asset management business launched its fourth private credit fund, which raised over 2,100 crores. The business also launched a flexi cap mutual fund in June 2023, whose NFO garnered over 200 crores. The board also approved the interim dividend of rupees 4 per share. And lastly, we have Tanla Platforms, which has posted a 13.86% revenue growth at 911.1 crores. EBITDA was up 39.42% at 182.2 crores, and PAT was up 34.84%. Significant events during the quarter included the acquisition of Value First Digital Media Private Limited, which was done for an all-cash consideration of $45.5 million. And the company also signed a direct contract with the world's largest e-commerce and cloud computing company for a CPaaS services contract.
So lots to watch out for in today's session. Thank you, Mika, for getting us those numbers. So watch out for all of these smaller companies in trade. But another key company we are watching out for is Reliance Industries in trade today, Alex. It has been in the news on the back of the demerger, and now a good time in terms of the earnings coming in. Sajid is joining in with more. Sajid,
good morning.
Good morning. You've been looking at Reliance over the last couple of trading sessions, from the demerger to now the earnings. What is the picture looking like?
So, it's going to be earnings, which is excluding the financial services business because it got demerged from Reliance. The revenue is expected to jump nearly 6.4% on a sequential basis in Q1, and net profit is expected to jump nearly 33%, and that's primarily will have an impact. The IPL will have an impact because we saw some of the media companies of Network 18 and TV 18 having good set of revenues in Q1, largely led by the IPL advertising revenue that came in. But refining margins is something which is going to drive growth in the first quarter, and it's going to aid margins for Reliance. We saw the Singapore GRMs hitting $25 per barrel in the first quarter, and that's going to will have good impact on Reliance net margins and net profit going forward. Geo revenues, or the telecom revenues, are expected to grow by 9%. Marginal jump in ARPUs, or average revenue per user, to 171 rupees per month per subscriber, and the subscriber base is expected to be around in subscribers, and marginally declining subscriber base because of consolidation in SIM happening in the industry, and a sequential fall in operating margins in the retail business. That's we're going to see. Though on a YOY basis, it will be a huge jump because of the kind of store additions that have happened in Reliance Retail in the last 1 year.
Okay, so there you have it. And in fact, considering the focus of yesterday, where we were talking all about JFS, today we're talking about Reliance Industries, and we'll have to see whether that anchors the rest of the benchmark, right? Which has proven the case for
So
the last
yesterday Reliance did anchor, and we saw, while we were watching Nifty heading to 20,000, we saw two trends happening. Infosys declining or showing signs of weakness.
IT was soft yesterday.
Infosys, especially in
And
the
the
last
longs
half,
were being unwound.
and in the last half, and we saw longs in Reliance also getting unwinded, and so these two trends, indicated that it may not hit 20,000. We don't know what's going to happen today.
We don't know what's going to happen today. I know what Sajid is thinking, though. Thank you so much, Sajid, for that. Several other stocks, and interestingly, we are focusing so much, Hiral, on the Nifty 50 and the benchmark index, but the broader end of the market has seen a lot of action. So you see a lot of smaller companies that have gained very handsomely, very significantly in the last 6 months, 5 months or so.
Absolutely. And right now, the trend that we're seeing is it's more of stock-specific action, but you're not seeing a major move in terms of the mid-cap and the small-cap index, right? The action is absolutely in the benchmark indices. So, I mean, what's in store? That's what we have to wait and see.
Yeah. All right. So let's talk about a few more stocks to watch. Varsha is joining in with some more pieces of information. Varsha, good morning. What are you picking up?
Good morning. So the first company that we have is Hindustan Aeronautics. So HAL, the Argentinian defense minister visits HAL and signed a letter of intent on cooperation for light and medium utility helicopters for the armed forces of Argentina. The next company that we have is LTI Mindtree. The company announced strategic partnership with Cypherma to enhance the threat intelligence capabilities of its XDR platform. L&T, through its L&T Innovation Fund, recently invested in Cypherma in a pre-series B round of funding. The next company that we have is Tata Motors. JLR today announced the appointment of Adrian Mardell as CEO and Richard Molyneux as CFO. The next company that we have is UTI AMC. UTI Mutual Fund launches UTI Balanced Advantage Fund, an open-ended dynamic asset allocation fund investing in a diversified portfolio of equity and fixed income. The portfolio of the scheme will be dynamically managed based on valuation and fundamental driven in-house proprietary asset allocation model. The NFO starts on July 21st, 2023 and closes on August 4, 2023. The last company that we have is IndiaMart Intermesh. Now, the board of company has approved buyback of rupees 500 crore, consisting of 12.5 lakh shares, representing 2.04% stake via tender offer. Now, the buyback price will be 4,000 per share, a premium of 38% over Thursday's closing price. Now, this is interesting stock. First, IndiaMart has got good results. Then, following this buyback, so interesting stock. Let's see.
So there could be movement on that one. But thank you, Varsha, for getting us the details. Within IndiaMart, another company which is looking at a buyback is a L&T. That also is going to be interesting to watch out for, because the previous buyback that they had announced as well, that was something which just fell through the cracks. From there on, what it would happen, what would come out of the board meeting is going to be interesting. In fact, Rishi is standing by with some other stocks to watch, highlighting a L&T in trade today.
Yeah, so L&T has announced its plans for buyback yesterday, and if you look at it in 2019, it had another plans, but it was rejected by SEBI. Now, this rejection was because post buyback, the debt to equity for Larsen and Toubro was exceeding the SEBI regulated 2. But post that, SEBI has relaxed the norms, and it has said that even if the consolidated post buyback debt to equity crosses 2, its financial subsidiaries debt to equity should not cross 5:1. Now, if you look at currently the debt to equity for L&T, it stands at 1.16 compared to the 1.8 during its previous buyback attempt. And similarly, if you look for L&T Finance, which is its financial subsidiary, it is also quite low compared to the norm. So it is currently at 3.8. So there's a good chance that this time L&T will get an approval for its buyback. Now, some of the other stocks in news is Jindal Stainless, which acquired 100% of Jindal Unit Steel Limited. So Jindal Unit Steel Limited is also part of the larger Jindal Stainless group. It acquired the additional 74% stake for 958 crores. So Jindal Unit Steel, it operates a 1.6 million ton hot strip mill and a 0.2 million ton cold rolling mill. and it is also undergoing an expansion of 3.2 million tons in Odisha. So all of this will also come into play for Jindal Stainless as well. Then Alcogo Logistics had its monthly update for June. So if you look at its less than fully occupied container volume stood at 7,45,000 cubic meters, and this was down 8% year on year because it was witnessing more and more competition for incremental volumes. Its container utilization index was also at 92, which meant that it has fallen 8%. And if you also look at the FCL, which is the full container load volumes, it was at 48,000 TEUs, which was again down 11%. And also some primary market action. So Utkarsh Small Finance Bank, which had its IPO recently, and it was subscribed about 102 times. It's getting listed today. So that's something to look out for us.
All right. So that's action in the primary market. More action to talk about in the primary market. In fact, there is an IPO that opens for subscription, and that is Yatra Hospital and Trauma Care Services. We were talking about healthcare as a pack not too long back, and we saw quite a few of them rally. Let's see what the kind of interest in this one is. Saloni is joining in with more details. Morning, Saloni. What do you have for us?
Good morning. So, as you said, the IPO for Yatra Hospital and Trauma Care Services, it's going to open on the 26th of July, and it's going to close on 28th July. So the fresh issue size has reduced from 610 crore rupees to 490 crore rupees after the company raised 120 crore rupees via pre-IPO placement of 40 lakh equity shares at a price of rupees 300 per share. There are also 65.51 lakh equity shares for an offer for sale by the promoters of the company. The fixed price band for the IPO is rupees 285 to 300 rupees. And the company commenced its operations in 2008 with a clinic in Noida, and currently they operate 3 super specialty hospitals located in Delhi NCR. The total current bed capacity of Yatharth stands at 1,405 beds. The proceeds from this IPO are going to be used for various purposes. So an aggregate of rupees 245 crores for the repayment or prepayment of certain borrowings of the company and its subsidiaries. Also rupees 130 odd crores for funding capital expenditure expenses of the company and its subsidiaries. Rupees 65 crores for funding inorganic growth initiatives, and the rest are going to be used for general corporate purposes. The shares of Yatharth Hospitals will list on stock exchanges on 7th August. So let's watch out for that.
Absolutely. And this is going to be interesting to watch out for as well because, majority of it, I mean, there is 2 parts to it in terms of the OFS as well as repayment of debt. And you're talking about a capex that will be met. And yesterday's session also, you did see some bit of movement that happened in terms of pharma names, specifically with Dr. Reddy, Sun Pharma. These were movers in yesterday's session. So interesting space to watch out for, an interesting day of trade as well, with one of the biggies that will be reporting earnings, that's Reliance Industries, and a lot of action in the IT pack is what we will be watching out for. And that's a wrap from Alex and myself. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BQ Prime.